We're also witnessing now this acceleration where we're seeing this banking consolidation. We're seeing winners and losers being chosen. The reason why the government has to backstop the banks, the reason why the system is failing is because they don't have your money. If they had your money, none of this would be a problem. A lot of us kind of in this Bitcoin community always kind of knew this day would come, and it's probably only going to get worse.
It's a bit of game theory because there is no bailout for JP Morgan. That's a bail-in. That's when they're actually going to use the deposits to bail in the banks instead of a bailout, because even the government won't have enough money. So thank God there's Bitcoin, and otherwise we're all in a lot of trouble.
What's up, Sats fans? Welcome to Swan Signal. My name is Sam Callahan. I am your host today. If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today. We got two guests. We got Tone Vays. He's a trader. He's an educator. He's a founder of multiple conferences, including Unconfiscatable. I've been to Unconfiscatable. It's an excellent conference. And so we're excited to have him on. We also have Mark Moss, who's the host of the Mark Moss Show, both a YouTube show and a nationally syndicated radio show with iHeartRadio. It's been a hell of a week in the markets. We've had another financial crisis going on, pretty much the second one in the last around 15 years. And I think we have two great guests to kind of talk us through what's going on here. So both of you gentlemen, welcome to the show.
Yeah, thanks so much, Sam. Always love talking to you and Tone as well. So it's going to be fun.
Yeah, this is great. Glad to be back on Swan Signal. Awesome.
Yeah, man. So we've basically had 4 bank failures in the past couple of weeks. We've had 2 crypto native banks in Silvergate and Signature Bank. We've had Silicon Valley Bank fail. And then we've had a global systemically important bank, Credit Suisse, essentially fail. It was basically a shotgun merger forced on them from Swiss regulators for UBS to come and acquire them. In that midst, we've had responses from Treasury, from the Fed. We've had emergency liquidity programs with different acronyms come out. And so it's been a hell of a week. And in that midst, we've had Bitcoin kind of just raging. And so let's just get your initial takeaway about maybe some of the events that have happened the last couple of weeks. Start with you, Mark.
I would just like to start out by reminding everybody that the government is, doing these studies to see if they can back all the depositors. And I would just like to remind everybody that we wouldn't have to guarantee deposits if the money was actually there. We could just think about that for a second. If the money was actually there, I've seen some really bad takes going on. Ben Hunt from Epsilon Theories going on and on and on about, the Bitcoiners are causing this banking collapse by screaming fire in a crowded theater and pulling our money out of the banking system. So we're the problem. There's this attack going on with Balaji because he made this $1 million bet and he's only leading to the banking collapse. But again, the banking collapse wouldn't happen. They wouldn't have to guarantee deposits if the money was actually there. So let's just start with that for a minute before we get into more of the technical stuff. I'd say, though, it's as a content creator, it's certainly been fun because we have a lot of stuff to talk about. I remember in the depths of 2018 and 19, man, it got boring. Like there was nothing to talk about. But it's interesting. We're witnessing the collapse of these institutions, and it seems like it's just getting bigger and bigger and bigger. And so if we kind of go back to last year, about a year ago almost, Terra Luna went down, and then Celsius went down, and that whole kind of collapse. And really, when you saw FTX go down, what I thought was really educational about FTX is it's basically what's happening in the whole ecosystem, but it was like very small. So it allowed us to see it happen in real time. And here it is bigger. So they took customer deposits. They spent those customer deposits in a certain way. In FTX's case, they bought a bunch of, altcoins or whatever they did. And then when customer deposits wanted their money, it wasn't there and they went bankrupt. And the same thing is what we're happening to see throughout the entire banking system. The banks also bought risky assets. This time, those risky assets happen to be U.S. Treasuries, and the Fed going on their warpath of reckless abandon of raising rates at the fastest rate in history has basically put all of these banks into insolvency. Right? They took the customers' deposits, put them into these risky assets, supposedly the risk-free asset. They lost a bunch of value because the Fed raised the rates, and now the banks don't have the customer deposits. So we're witnessing that happening. We're also witnessing now this acceleration where we're seeing this banking consolidation. We're seeing winners and losers being chosen. There was testimony, I forget which senator it was, I believe from Oklahoma, was questioning Janet Yellen and saying, well, which banks are going to get the bailouts? And she's like, well, we're just going to make a decision. Well, what's the decision criteria? Well, we're just going to discuss it. Well, which banks are going to, well, we're just going to decide when the time comes. And so here we are witnessing this consolidation of the banks. They're picking winners and losers in real time, but it's systemic to the entire system. And it's certainly leading us down a path, but I'll pause right there and let Tone chime in.
Yeah, there's really not that much to add other than, look, the banks have problems with or without the monster increase in interest rate that Powell's been doing. But it certainly brought it up to the surface a lot faster. Silicon Valley Bank happens to have more exposure to the longer term bonds that other banks did. So they had more of their percentage in longer dated maturity US Treasuries that are supposed to be risk-free. And they had a more collateral of their clients in that asset than other banks do. So that's why this really fast increase by Powell caused that bank to pretty much break first. Now, other banks are in a similar situation, just not to that degree to go down that quickly. Now, I understand why Powell's raising rates, and I personally expected it to cause major havoc on the Treasury side, in the public debt side, but that was going to take a couple of years when the government has to realize that they owe $1 trillion a year in interest payments on the $30 trillion of debt that they've been continuously borrowing and never paying off the principal. But it looks like he's causing havoc in the private banking sector first. And Mark is right. The banks are going to consolidate. People are going to move their money to the bigger to fail banks, where ultimately it's a bit of game theory because there is no bailout for JP Morgan. That's a bail-in. That's when they're actually going to use the deposits to bail in the banks instead of a bailout, because even the government won't have enough money. So thank God there's Bitcoin. And otherwise, we're all in a lot of trouble.
I want to add a little bit of color to some things that Tone said. So regarding the SVB Bank, they were way more risky than the average bank. So they had 57% of their assets in investments. Now, what does that mean? Well, the average bank in the U.S. has 24%. So they had 57% instead of 24. So they were way more risky, right? Had way more money in investments. They had 78% of that in MBS, mortgage-backed securities, compared to the average of like Citibank and JP of only 30%. They were 78%. So they're way more out on the risk scale. We know that some of the founders of the bank were previously with Lehman Brothers when they went down. They should have known better. San Francisco Fed, they had inside information. They should have known better. And so they were certainly more risky and caused their depositors to have more risk. They were bailed out, which was unfortunate. We can maybe talk about that because it shortcuts this capitalism. The age of the era of consequence that we need to kind of come back to. They wouldn't have been totally insolvent. I don't really know estimates. Maybe depositors would have taken a 10-15% haircut, which maybe would have been the slap on the wrist they needed to wake up and hey, don't touch that hot stove again. They wouldn't have necessarily been bankrupt. It wasn't systemically important to wouldn't have brought down the entire banking system. What it would have done, though, potentially, and this is what they're afraid of, is what it would have done is it would have destroyed the confidence in the banks, right? So the banking system is a confidence game or a con game, right? And if we don't trust the banks, then the entire system collapses. And so if the depositors didn't feel their money was safe, which they should know that by now, they would have pulled the money out. I think, though, that damage is done. I think even though the Treasury stepped up or I should say the Fed stepped up to back those deposits. I mean, the people see what's going on here. The emperor has been shown to be wearing no clothes at this point. And so, it's going to be interesting to see how it plays out.
Yeah, it's almost an indictment of fractional reserve banking, right? Because all these banks are technically insolvent if all their depositors try to flee at once. That's just how it works. But you both brought up Fed policy as a potential part of the blame game here. Uh, Earlier, the last couple of years, they've kept interest rates super low. It basically blew up all these assets, created these tech bubbles, crypto bubbles, and blew up their deposits in these banks. And they had to put the money somewhere. And then they were getting forward guidance from these central bankers that they weren't going to raise interest rates, right? And the forward expectations in terms of the market also thought that inflation was going to be transitory, quote unquote, right? So how much blame is put on the Fed for not seeing inflation coming?
It's all on the Fed.
You think it's all the Fed? Why don't you go deeper?
They're the arsonist and they're the firefighter, right? So they're the arsonist. So to your point, I mean, we can go back as far back as we want to 1913 when they were created. But if we just look back to the pandemic, right? I mean, in 2020, between the Fed and the Treasuries, somewhere around $11 trillion was pumped into the system. Where does that money go? Well, most of it found its way into the banks. In 2021, some of you guys might remember that some of the banks were saying, "Whoa, we don't want any more cash. Don't give us any more deposits. Reinvest into your business. Send it to another bank." Like they didn't know what to do with it. So the bank balances swelled, and then what do they do with that money? Well, they're trying to find a place to put it. A lot of it goes into Treasuries. So for numbers, SVB balance swelled from 60 billion to 190 billion. In about a year and a half, from 60 to 190. And so the Fed was the arsonist. They created this fire. They put all this money out there. These bank balances swelled. They pushed them into these treasuries. And at the time, the treasuries were still down. The interest rates were still down at zero. And then to your point, Sam, you're absolutely right. They've given all that forward guidance. We're not thinking about raising rates. They said they wouldn't raise rates for 4 years. So no one really expected them to raise rates till about 2024. We all knew better. The bank should have known better. It's not really, we can't let them off the hook, but certainly it's the Fed's fault. They put all this money in the system. They took all that money into the bonds. Then they raised the rates, which then brought it back down. And so they caused the fire. Now they're trying to solve it. So all the blame goes to the Fed.
Yeah.
So my view is a little bit different. I see the Fed as more of only the firefighter, but a very, very bad one. Like you're better off without this firefighter. To me, the arsonist is the Treasury and the Senate and public policy, because they're the ones that can't run a proper budget. The government is now going to be perpetually $1 trillion in the deficit every single year. And that's where it starts. And now the Fed has certainly made mistakes. Mostly the predecessors of Jerome Powell made the bigger mistakes, where they lowered the interest rate too low, they keep it there way too long. And because of that, we ended up with an extended zero interest rate between like 2009 all the way till 2015. And after COVID, again, it dropped way too low and it stayed a little too low there. So they're just really, really terrible at their job by doing what they're doing. And they're forced to always bail out the government by coming up with these schemes that end them into trouble. Now,
but it's not just the government though. They have to bail out all the corporations. They have to bail out the mortgage industry. So in 2020, right, they started buying private bonds, corporate bonds. Yep. And so you're absolutely right. The government can't live within their means. It's way more than $1 trillion per year. The Treasury had to borrow almost $1 trillion just this first quarter, 932 billion. Quarter one, right?
Yeah, no, Mark, no, you're right. I mean, the Fed does also do silly things, but the government was certainly encouraging these policies of anyone needs to own a home and anyone should get a mortgage. Wall Street was just repackaging the stuff that others wanted to buy. There's plenty of blame to go around.
Sure.
But personally, I start with the Treasury, then I go to the Fed.
Yeah. I mean, it's fair, right? I mean, obviously the Treasury, to your point, can't live within their means. And they also, like I said, it was about between the Treasury and the Fed, there was about 11 trillion. So they were, almost equal in that kind of, increase in the money supply back then. But the Fed, to your point, is the one that sets the price of money. And most people listening here, I'm sure, probably already understand that price fixing never works. It leads to shortages and higher prices. And the Fed is basically price fixing. They're setting the price of money, which sets the price of everything. But yeah, Tone, there's certainly enough blame to go
Yeah, it's
around.
not really, and also look at it, right? Anytime, at any point, the whoever's in charge of the Fed is usually the more responsible person versus the one at the Treasury. Right now, we're looking at Yellen versus Powell. Back in 2008, it was Bernanke versus Paulson. You can clearly see which one is actually trying to help and which one is just there for their friends. They're stuck between their corporate buddies, where they usually come from, and reporting directly to the government. Fed at least has maybe 10 to 15% independence, but a Treasury has zero.
Yeah, and it seems like we're seeing a little bit of a shift in the Fed. I kind of buy into this theory. Well, we're all Bitcoiners here, so we all buy into the theory that probably the number one piece of FUD that we would hear from a no coiner would be that the governments or whatever would never allow, the central bankers would never allow Bitcoin because they wouldn't have a competing form of money, which is true. Who controls the money controls the world, but who controls what money? And so what I've seen kind of shaping up is I kind of take the viewpoint that the Fed, Jamie Dimon and the Fed wants to control the money as the US dollar. They don't want to give up control to the ECB, right? They don't want to give up control to the PBOC or whatever it is, right? And so it looks like the Fed is starting to work more independently from the Treasury, where the Treasury, the Obama-Biden administration, wants to be in bed with the EU, ECB, Davos group, $130 trillion over the next 30 years for this, green energy transition. And the Fed's like, whoa, 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 whoa. Like, we're not doing that. We want to keep control over money. We want to keep the dollar strong. And I think there's this rift going on between the Fed and the Treasury.
Oh yeah, 100%. And for those listening that aren't very familiar, and everyone always talks about the Fed, especially in the crypto space, the main job of the Treasury is to lend money to all of the other government departments, or themselves for that matter, when those departments can't live within their means. So when the education department doesn't have enough money, Treasury creates government bonds and they give them the money. And the Fed is responsible for kind of making all that work at the end. But it's the Treasury that actually creates this money out of thin air, like your bank giving you a mortgage. The Treasury does that for all government departments and all government initiatives. So to me, that's where it all starts. And then the Fed just tries to do the best it can with the situation it has. And very often it does a very bad job and makes things worse.
Yeah, it's monetary policy versus fiscal policy. So the monetary policy of the Fed is basically setting the price of money, and the fiscal policy is then controlling the budgets of all the different departments. I want to bounce back to something that Tone said though a minute ago, where you were kind of saying really what they've done is kind of put a hurting on like the smaller banks, like the more regional banks. But I would actually that certainly is true. But I think the Fed, through their reckless abandon of raising rates at the fastest rate, I think since whatever last 4 or 5 decades. They've bankrupt themselves. They've bankrupt the Treasury, and now they've bankrupt the banks. So we've seen the Fed, right? The Fed is losing money. They're a bank, right? We've all seen the picture of the balance sheet and then just the drop off the cliff, right? Now they're just putting all those losses off to the side. Let's just not talk about those. Let's not look at those. So the Fed is essentially bankrupt, right? They're as a bank, right? Their liabilities exceed their income. The Treasury is now bankrupt, right? So the Treasury is in this tough situation where their interest payments are going up. Now, $31.5 trillion of debt is all due at different maturities, but already they can't afford the interest on the debt. That's why this whole debt ceiling is, if we don't take on more debt, we can't, we're going to default. We know that 30% of that $31.5 trillion has to be refinanced in the next 12 months. 30% of it, 50% has to be refinanced in the next 36 months. And that's going to be an average an interest rate right now. It's an average interest rate of 1.7. Once that gets refinanced, it's going to be between 3.5% to 5%, depending on where rates are going to be. And so what we're seeing is the interest payments on the $31.5 trillion are going up at the same time as the Fed is crushing demand to fight inflation. And so that crushing demand has had a drop in tax receipts. So we've seen federal tax receipts drop by 9%. At the same time, interest payments are going up. And so the Treasury can't even afford that. And now the banks are bankrupt. So all three are bankrupt at this point.
Yeah, that's a huge problem. Like for me, and I've been covering this on my channel, the people have no idea. Not even people at the government seem to have any idea. One or two of the economists might, of how exponential the government bills are about to get. Imagine if you were financing your life for the last 20 years on a credit card by never paying off the principal and just making that principal bigger and bigger and bigger. But for the last half of that time, for the last 10 of your 20 years, the interest rate was zero. So you kept borrowing more money, taking on more principal debt, but without an interest payment. You were just paying the interest without adding anything because the interest was almost zero. It was small. Suddenly the interest goes to 5%. And that bill is about to start going exponential. The interest on cumulative national debt is the only part of the federal budget that's about to rise exponential over the next 3 to 4 years. And after that, as long as interest rate stays above 5%, that's all it has to do. If Powell keeps that interest rate for 5% his entire term, the interest payment alone on federal debt is going to exceed $1 trillion within 2 years, and probably exceed $2 trillion by the time he's done with his 5-year term. It'll be insane.
It'll exceed income tax receipts.
Yes, just the interest payment alone, not counting running the country.
Yeah,
and that's
or entitlement programs, right?
And that's assuming that tax payments don't go down. But of course, if they keep it at those rates, tax receipts are going to plunge. They already are 9%. In California, we've seen them drop between 20 to 40% between personal and corporate tax rates. So it's plunging quick.
And foreign countries are recognizing this. China has been dumping their treasuries like crazy. They were at like $1.5 trillion or 1.3 trillion just 3-4 years ago. They're now down to almost half that at 800 billion. They are dropping over $10 billion in liabilities for them now of U.S. debt. Russia is already in a position where they have zero U.S. debt. They got rid of all of it. China is going to get rid of all of it. So who's buying? Japan, Europe, and a lot of it is being bought up domestically. So we are going to owe this money to ourselves. However, if the U.S. doesn't make that interest payment, that's a default.
Yeah. And I mean, Japan, I think, is the largest holder of treasuries, right? Or second largest. And they've also been dumping treasuries because they need to sell the treasuries to prop up their own currencies. That's an FTX in reverse, right? So FTX had their own token, FTT token. They were forced to sell their other tokens to try to buy up their FTT value. And that's kind of what Japan's doing, right? They're selling U.S. treasuries to keep their Japan token propped up. And so we're also seeing other countries, Germany, selling U.S. treasuries as well because they're trying to meet their energy costs. And so, it's all unraveling pretty quickly.
Who's going to be the buyers?
Yeah, there's
Who
nobody
are
left.
the buyers of these treasuries?
Middle East is about to go into all of these deals for their oil outside of the U.S. dollar. They're not going to be stuck with all these dollars. They're not going to have demand for U.S. treasuries. It's going to be really interesting who's going to be buying all this U.S. debt.
Well, retail's buying it at 5%. All that money, that's part of the reason why the banking collapse is also exaggerated because the banks pay you 0.8% interest, but I can go park it at the Fed and get 4 or 5%. And so why wouldn't I do that? And people are. And so that's where a lot of that money is going. And so assuming the Fed continues to pay that 5%,
Right, but Silicon Valley Bank just found out why. Because when you buy a bunch of it at a longer duration and interest rates keep rising, your bank blows up.
Yeah, but the yield curve's inverted, so I might as well buy the short end and get the higher rate anyway.
Now they've learned. Yeah.
Yeah.
What about this new program, this bank term funding program that basically removes the interest rate for these banks, right? Could that be another source of demand? Why wouldn't these banks pile into treasuries now that it doesn't really matter that they can just access this facility? It's supposed to be temporary for a year, but we all know how temporary these government programs are. Do you guys think that could lead to a source of demand for these treasuries?
Well, it certainly de-risks them, right? So now they don't have to actively manage it. They don't have to hedge it, et cetera, if the Fed's going to guarantee that. It's interesting. We'll have to see how that plays out. Just when it looks like the Fed is backed into a corner, they pull some other magic trick out there, out the hat, right? It's where a
Mhm.
lot of these analysts like Harry Dent. Uh, I think his research is amazing. I think he's right. What he's been wrong about is he just continues to not see these magic tricks and how they keep coming. But yeah, I mean, if they de-risk that situation for banks, I mean, why wouldn't banks do that? To your point, it's only a year, so we'll see how that plays out. But yeah, it probably goes permanent, I guess. I mean, ultimately, if we want to kind of zoom out, where does this all go? I mean, the Fed's going to backstop everything, and we're all just going to have accounts
Yep.
with the Fed. I mean, that's where it's going, right?
Yeah. US has a huge advantage in that the rest of the world, or most of the world, is having bigger issues with their financial system. And most of the world were lending in dollars. That's the whole concept of the euro dollar. Euro dollar has nothing to do with euros. It's basically dollars outside of the US and all the loans denominated in dollars outside of the US. And he's blowing up that whole thing. This is why most of the currencies are crashing against the dollar. And this is what makes Balaji's bet a little bit crazy, in that I'm expecting the US dollar to strengthen over the next several years, not because the United States dollar is so great, but because it's usually compared against other Western countries, which are in significantly worse shape with a lot bigger problems, from inflation to being self sustained to them printing an unreasonable amount of money to fund all of their government programs, not to mention them lending out in dollars constantly, and now that interest rate is rising. And they can't print like as many US dollars like the US can. So I'm not expecting the collapse of the US financially anytime soon. I'm expecting completing the collapse in Europe first. Europe, Japan, Canada, I think those countries are going to go down first before the US finally does. That's kind of my view on it. So the US is still not in as bad a shape as some of the other places.
I would agree with that. I just put a video of Janet Yellen on my Instagram account about an hour ago, where she was just saying, "Look, the U.S. financial system is still the strongest and best financial system in the world." And I'm like, yeah, but I mean, what are you comparing it against? The other financial systems? That's not saying a whole lot. So to Tone's point, that's exactly what she was saying. It's the cleanest shirt in the dirty laundry, or whatever, as we say. And I would also agree. What makes it interesting is the rise of the BRICS, and what's potentially going to happen there, right? President Xi from China was just in Russia this week. Yesterday, I think they kind of announced,
Still there. Three days, which
Oh,
is
okay, yeah, he's
a
still
long
there.
time.
And
Did you guys read that letter, Mark? Did you read that letter that she wrote?
was it today or yesterday?
I think it came out yesterday, but it was basically how they're, Russia and China are friends, and it was very, very accommodative to Russia, and I think it spoke volumes about their relationship.
I didn't see that, but there's a whole lot to unpack there. I think that's super. That's super interesting. In a video I did in the last couple of weeks, I'm trying to find it here real quick. There was a video that came out. I'm sorry, not a video. There was a letter that basically the Chinese, the PBOC, the CCP put out, and it was a letter, and it basically said, the United States is a terrorist organization. I mean, that they didn't say that exactly, but they said that the United States uses their dollar to practice colonialism all over the world. They said it costs 17 cents to print a $100 bill, but yet another nation has to come up with $100 worth of goods to get that bill. They said that They said that the U.S. has been behind every single color revolution since 2003, and they listed them all off. I mean, they came hard, and this was the official Chinese government, and it went out to the rest of the world, kind of put them on blast. So they need Russia to succeed. If Russia falls, China is left dangling on their own, right? And so, of course, they're gonna band together, and that's something definitely to pay attention to.
The geopolitical situation is really interesting. I was not big into geopolitics until more recently, and now it basically dominates what I'm reading every single morning. The relationship between China, Russia, India, and then how countries like Iran, North Korea, the Middle East and Turkey fall into it. And it's horrible for the US because there just aren't, I don't know, there has seemed to be terrible at diplomacy over the last several years. Meanwhile, you have Russia brokering peace between Turkey and Syria. You have China brokering peace between Saudi Arabia and Iran. And this is really unprecedented. Uh, India and China are going to work out their small differences. The West seems to think that there's these major obstacles between a lot of these countries. And these are actually small obstacles that these other countries are resolving between each other because they're all finding common ground that the US is their mutual enemy. And this is the real danger for the United States. Diplomacy right now is being won by the BRICS, and their payment system, their competitor to SWIFT, is coming online fairly quickly. They're going to add a lot more countries into it. Brazil is, I wasn't happy about the way the election in Brazil went, but it's going to stay the course with the BRICS. Mexico just announced they want to try and get into the BRICS, which caught me by surprise. News. I didn't think Mexico would have the stones to make that announcement.
Wow. But the U.S. cannot allow Mexico to go with the BRICS. The U.S. has to hold on to that. I want to update just real quick what I was saying, just so anybody listening. It's from the Ministry of Foreign Affairs of the People's Republic of China. So that's who put out the paper.
Gotcha.
It came out 2/20/23, so just last month. It's titled U.S. Homogeny and Its Perils. So if anybody wants to look it up, U.S. Homogeny and Its Perils, last month, Ministry of Foreign Affairs, People's Republic of China. And they basically, like I said, framed up the U.S. exploits the world through seigniorage. They're plundering nations' wealth. They said, quote, the USD is the main source of instability in the world. And they boldly interfere in other countries. So anyway, it's worth a read.
Yeah. Let me read a little piece from this letter that G wrote yesterday. So he authored this and signed this, and this is about their China and Russia relations. He said, our two sides have acted on the vision of lasting friendship and steadily strengthened our traditional friendship. On the occasion of commemorating the 20th anniversary of the China-Russian Treaty of Good Neighborliness and Friendly Cooperation, President Putin and I announced the extension of the treaty and add new dimensions to it. And so they basically talk about how they want close coordination. They want more cooperation and peace between the countries and coordination and planning towards our dual goals. So it's pretty phenomenal letter. I'd recommend checking it out. Probably Google it.
But what I don't like is that, just being an advocate for, free market capitalism and we'll just call it freedom. There's really two ways to get wealth, right? And one is cooperation and one is coercion. And while I'm certainly no fan of the CCP or communism or anything that they've done, I'm strongly against everything they've done. Through their Belt and Road initiatives and what they're doing with Russia today and everything, it looks like they're being much more cooperative with other nations, right? Entering into long-term trade agreements and buying up resources and exchanging currencies, versus the U.S. is just trying to coerce everybody and just bang everybody over the head with this weaponization of the USD. So hopefully that ship can turn around here pretty soon.
Yeah, and I'm gonna throw one more out there. Africa is kicking their European colonialists out. Like many of the countries are still tied to the French franc. Some of the countries still have influence by Germany. And those meetings for the European leaders going to Africa have not been going well at all. The United States didn't really have as much control over Africa as Europe has over this past century. But it's starting to look like the West is losing full control of Africa. And the only thing they still have left is South America. And let's see how long that lasts.
Maybe go back a little bit to the responses from the regulators and the Fed from this banking crisis. Basically, their balance sheet has exploded $300 billion in 1 week, reversing 4 months of quantitative tightening. People are going to argue that this isn't QE, these are just loans, and that this won't affect the taxpayer, right? This actually will be paid off by corporations. I want to know what you guys think about that. If you guys think this will come back to the taxpayer, I want to know about, do you guys think this is the pivot? A lot of people talks about how something needs to break, right? They can't keep interest rates this high with these debt levels, something will break. People are looking at these banks and saying, well, it happened. And now the money spigots are eventually going to come back on in full force. So maybe talk about, will this affect the taxpayer? And is this kind of the start of a new quantitative easing regime, accommodative monetary policy regime?
So I would say,
What do you
first
make?
of all, of course, it comes back to the taxpayer. It always comes back to the taxpayer. It's only going to go, oh, the banks are going to pay it. Well, the banks are going to pass those costs on, right? I mean, that's how business works, right? Businesses aren't there to lose money; they have to be profitable. And so, if their expenses go up, then their prices go up. And so, if the banks are going to have to absorb that, then it eventually falls back to the taxpayer. So, of course, it does. As far as this argument of is QE inflationary, I think it's what I call factually correct but intellectually dishonest. So what do I mean by that? Um, all government intervention has an effect on the markets in inflationary or deflationary. And so, you could argue that QE isn't inflationary if you were to potentially strip out asset prices and only look at this. But what it does psychologically is it starts to say, well, the Fed is now bailing out the banks, so then my deposits are safe, so then I'm okay to go spend more money. If I think the banking system is going to collapse, the financial system is going to collapse, I'm going to hoard my money. I'm going to stop spending, right? And that's going to be deflationary. But when I know that the Fed is pumping in money, right? They're bailing out the banks. They're putting money on the balance sheets. They're bailing out the system. The system's not going to collapse. Then I'm going to keep spending. I'm going to book that vacation. And so just by them doing that alone, I believe is inflationary.
All right, so I'm gonna be giving a slightly different answer. I'm gonna
Come on, Tone, disagree.
be the contrarian here. So I think that this huge rise in the Fed balance sheet in 1 week, I think it's blown way, way out of proportion. I see it as basically almost irrelevant from several perspectives. First of all, the whole COVID thing. The government chose to shut down the economy. The government chose to create inflation by shutting down the supply chain. They forced a lockdown on something that was completely unnecessary. So prior to the start of 2020, the Fed balance sheet was 4 trillion. Within 5 months, it went to 7 trillion. I'm looking at I pulled up the Fed balance sheet on Fred. So we went from 4 trillion to 7 trillion in 6 months in 2020. Then it grew to effectively 9 trillion, just a few billion off of $9 trillion. This was in 2022. In the middle of 22, it was 9 trillion. The Fed then dropped it from 9 trillion to 8.3 trillion. And now it went up a little bit back to 8.6. Like, to me, this is it's good. It looks huge like over a week span. But when you look at the last 2.5 years of the Fed balance sheet, this move is like this. It's completely meaningless. I don't think it's going to affect the taxpayer directly. But of course, everything affects the taxpayer indirectly. Like, I'm not going to sit here and say that what just happened, is not going to affect the taxpayer at all. But the taxpayer has like 20 problems that are bigger than this. Again, starting with the increase in rates affecting the cumulative debt of the government is the biggest effect on the taxpayer. The fact that inflation is still happening due to the government shutting the coordinated effort to shut down the world, that is affecting the taxpayer way more than the Fed balance sheet ever did. So the answer is yes, it is going to affect the taxpayer, a little bit more fees. And if the FDIC completely runs out of money and the FDIC needs to be bailed out, now the Treasury prints it, that's going to add to the debt that the taxpayer will ultimately have to pay. So yes, it affects the taxpayer. But of all the problems for the taxpayer, this thing that just happened with the banks is like 5% of their problems.
The only reason why I would I want to kind of dig into that is that while Tone is absolutely right, I mean, as a percentage size of the move, it's small, right? But what's important when you're looking at charts is the speed and size of the move and the direction it's going, right? And so I think, to your point, it's a small percentage move, but it has erased about half of their work that they've been doing tightening, and it's the speed and size of the move, and more importantly, it's the direction of the move. It's knowing why they made the move and what other problems are out there in the world, like Credit Suisse, that's going to continue to have them making these moves. So, right, we're because markets are forward looking, right? We're always trying to guess, right? They're betting markets, trying to bet where the markets are going. So when you see a move this fast of this size because of the conditions that have been created, but then you see the rest of the conditions that are out there, then you would just go, well, this direction, this move is going to continue. It's going to sustain at this rate, most likely. So yeah, it is a small percentage, but it was a big and it was a fast move, and the problems are much bigger than what they've been able to solve so far.
Yeah, I think it speaks to the craziness of the last couple of years that's a relatively small move, because what is that? That would be like almost half of TARP back in, but now it's nothing. And in terms of the taxpayers, now they're talking about backstopping all deposits, $17.6 trillion in deposits. Like, what happens if more banks fail? That's going to be on the taxpayer because the FTC can't afford it. FDIC can't afford it.
It's a drop in the bucket.
What's been
drop in the bucket?
Drop in the bucket. What's another trillion or so, But what's been interesting in these bank runs was the backlash on Bitcoiners for calling this stuff out. We've been calling this stuff out for years, about kind of the folly of fractional reserve banking and how these banks are insolvent. And if this ever happened, well, it did happen. And now we're getting kind of blamed for it. And one of them was Ben Hunt, who, honestly, I've been reading his stuff for a long time. He's a smart guy, but he's always been kind of hostile towards Bitcoin. And he wrote, Bitcoin bros encouraging bank runs and a global economy shutdown is astonishingly evil and profoundly stupid, even for self-absorbed imbeciles who just discovered that, yes, fractional reserves mean banks don't have enough cash to give everyone their deposits back immediately. And so we're getting this resentment towards Bitcoiners for basically calling out that the ship is sinking, right? And you should maybe try to protect yourself, maybe own something that is outside this banking system that seems to be falling apart. But we're getting blamed for it. And what do you think of that? I'll throw it to you, Tone, and then Mark.
Yeah, it's I don't really think much of it. Here's where the trap I don't want to fall into. I don't want to fall into like the Peter Schiff trap and all these gloom and doomers. When I started changing my view on economics and finance, my background was financial engineering, but I started in graduate school. So it was a little bit different path towards finance and economics for me, because the first economics course I ever took was a PhD level economics course, which was basically all math. So I somehow managed to skip micro and macroeconomics in college, but somehow ended up in a PhD level course that required a full year of graduate microeconomics to get into that course. So my economics was purely math-based and not theory-based. And it was from the perspective of how to build Wall Street derivatives. A little bit different path. And the trap I don't want to fall into with Peter Schiff is that when you scream the same thing over and over and over again, and then you are right once every 10 years, and then actually miss the innovation and technology. So that's what I really want to try to avoid. The beauty here is that there's something happening every 6 months to a year that shows a need for Bitcoin. Right now, it's these private banks and how, the banks didn't have enough money to withdraw to people. Last year, it was the US government removing a country from the SWIFT system and confiscating their money at the central bank. I'm wearing my unconfiscatable shirt right there. And the year before, it was the whole COVID thing where with the truckers in Canada, where all of a sudden you donated $10 to a political cause and your bank account was frozen. Yep. So and we can go back year after, like backward, right? So every year there is an incident that proves why Bitcoin is so important. And it keeps driving the price of Bitcoin up and up and up, other than an occasional, one-off year every 3 to 4 years. So, he can keep screaming about it all he wants. But this is also why the moment someone gets into Bitcoin, it's never an easy decision. it is always a tough decision. Bitcoin will continue going up, and the more people scream against it as it's going up, the slower it will go up and avoid the next bubble potentially, but eventually FOMO sets in. So we need guys like that. Otherwise, it'd be too easy.
Certainly, Tone is right with all those things he's called out. The governments are kind of doing the marketing for Bitcoin, and he called out what's happened kind of in the West, in the U.S. and Canada. It happens every single day in North Korea and Turkey and Argentina and Lebanon and Iran and et cetera. So we have to kind of expand our view past a U.S. centric viewpoint. I know, Tone, you're definitely more of an international person, so you see it, right? I mean, there's massive need internationally. In the U.S., we've gone, you're sipping your $20 drink in Manhattan, and you're like, why do we need a different form of money? And now we're starting to see that. And as the financial system collapses, as the political system collapses, right now over in France, there's like massive protests going on. Like they want Macron's head on a stake. Yeah. They're calling for guillotines again already, right? And they're saying it's because they're trying to change the retirement age by 2 years. I mean, come on. It's because the people are tired of authoritarianism. They're tired of unsustainable inflation. And so as this continues, the governments have no choice but to continue to squeeze harder, try to silence misinformation, malinformation, deplatforming, financial censorship. And as they continue, it just continues to increase the marketing, the need for Bitcoin. But back to kind of the original question of Ben Hunt. Also, like I said, there was also heat going to Balaji as well. And it's just ridiculous, I get the whole analogy of screaming fire in a crowd theater, but if there's really fire, you should tell people, and they should try to get out there as soon as possible. That's kind of like a thing about free speech. You shouldn't say that if there's not, because people could get hurt. But if there really is a fire, you should tell people. And so I kind of commented on his thing, and I was like, so if the captain was drunk driving a boat and he rammed it into an iceberg and the ship is sinking, and I'm like, hey, there's a lifeboat, we should go get on there. You're basically saying, no, we should stay on the lifeboat. We should stay on the ship and just go down with it. He's the one that's drunk. He's the one that crashed the boat. And there's a lifeboat here for me. I should take that, and I should tell as many people as I can to get on the lifeboat. So it goes back to kind of what I said opening. The reason why the government has to backstop the banks, the reason why the system is failing is because they don't have your money. If they had your money, none of this would be a problem. And so I think it's ridiculous for them. But I would also say that I think a lot of us kind of in this Bitcoin community always kind of knew this day would come, and it's probably only going to get worse. As people begin to suffer hardship, they're going to have resentment to anybody who's been able to protect themselves. And you see this all the time. It's just kind of human nature. But, I remember years ago down in Cabo San Lucas in Mexico, a big hurricane took out the roads. They couldn't get any supplies. And people were they'd walk through the neighborhoods. Anyone had a generator running, they'd go in and loot them, right? They were mad that those people were surviving. If you look at the BLM riots, in the last election cycle, anybody who would come outside to try to guard their storefront were attacked, right? It's like, how dare you protect yourself? We're all in this together. Let's all go down with the ship kind of a thing. So I think it's ridiculous, but I think it's also going to probably increase. And so, we should be prepared for it. But at the same time, we're not causing it. So it's kind of ridiculous.
And it's actually happening super quick. I know we're sitting here in real time and we think that this Bitcoin revolution of people believing in a different medium of exchange and a different store of value, we think it's happening slowly. It's not. What Bitcoin has done in the last 10 years, I really don't like looking back at Bitcoin in its early days, 2010, 2011, even 2012. It really obscures because of that percent rise in the early stages. But if you just look at the last 10 years, from 2014 or 2013 up to now, 2023, it has been an incredible change in people's attitudes about money. And it's happening globally, all over the world at the same time, which normally would make things go slower. But the information age is definitely helping. Real quick, back to France and geopolitics, real quick. This is probably the first thing Macron is doing that is probably the right thing to do. But because of these governments and them doing the wrong thing for a long time, you can't even get something that needs to get done because you already have such a low rating and everyone already hates you. And this is what happens. So it's kind of funny that this is going to be the one issue that's going to get him out of office. Meanwhile, this is the one thing that France needs to do. Like, I'm sorry, people are living longer if they stay healthy and pay attention to their own personal health and not listen to others. And retirement age should be up. But I just find this super ironic.
Yeah. It's like this lack of trust in these centralized institutions. And that's really what Bitcoin is, right? It's this decentralized revolution. Mark, I've heard you call it the sixth technological revolution. Do you maybe want to expand on that? Because I think that's an interesting idea.
Yeah, so we've had like 5 technological revolutions. It's a difference of technology is like is a continuation of something. So you take existing technology, like an iPhone, took a phone and a computer and put them together. But a technological revolution is when something completely changes. So it, one, changes the course of humanity, and 2, drives financial markets. So we've had 5. There's the Industrial Revolution. All of a sudden, machines could do the work of 5,000 men. Then we had railways and steam engines. For the first time in history, now we could move stuff across continents without horse or manpower. We had electricity and steel. I don't have to tell you how big those were. 1908, we had oil and the automobile and mass production. And then 1971, we had the microprocessor. The microprocessor brought us personal computers, brought us the internet, brought us telecommunications, et cetera. And each one of those changed the course of humanity. You already know that. But they also drive financial markets. And so the last 50 years has been dominated by telecom, computers, internet, FANG stocks. Before that, it was Ford, GM, GE. Before that, it was steel and oil, right? So each one of those drives financial markets. And I believe we're witnessing another technological revolution where this time chain, this Bitcoin time chain, has given us like a new set of building blocks. And because we don't, humans are no good at imagining the future, we can just imagine better versions of what we have today. We have cars, well, flying cars. But what happens is each of these things give us a new set of building blocks that allows us to build things that we have no idea about. And I believe that's what we're witnessing right now. Just like electricity, the first killer application of it was a light bulb. So if you're trying to understand what electricity was, well, it's sort of like this light bulb.
We lost Mark. Yeah, so we've had all these technological revolutions, and then in comes Bitcoin. I mean, Tone, do you agree with this idea that Bitcoin's this next technological revolution that's going to drive financial markets and the economy forward?
Yeah, 100%. This is the fifth or the sixth major technological revolution we've had. It all started with the Industrial Revolution, and then it moved on to railroads uh, and then the steam engine, and then the combustion engine with oil, the microprocessing chips that led to the internet, and now it's Bitcoin's turn. And so let's see where it goes. And we don't know where it goes. When a use for oil was discovered, people didn't know what it would lead to, but it led to all this innovation. Same thing with the internet. When the internet was starting out, we didn't know where it would lead to. And look at us now, having this conversation.
Yeah,
Over
and who knows
telephone.
what the sound money will do, right? Sound digital money can allow people to save, which increases investment, improves capital allocation, increases productivity. Like it could be the biggest one of all, in my opinion, because they kind of build off one another, right? So I think it's really interesting.
Right. And the greatest thing is the ability to now save your wealth.
Yeah.
Some of the greatest innovations throughout history have been a person motivated to do so. And when you're unable to save money in something or save wealth in something that can't be confiscated, it can't be debased, you can't beat that because then people will end up financially free to innovate, and Bitcoin allows for that opportunity. And I can't wait for the innovation that is to come over the next several decades and hopefully the rest of the century.
Same. I mean, that's why I'm in Bitcoin. It's about the benefits to society overall and productivity. I think that's the most exciting thing to think about. But Tone, you're a trader, man. And so Bitcoin's been ripping in 2023. It's the best performing asset class on both a risk adjusted return basis and absolute return basis on the year. I mean, obviously, this backdrop was kind of built for Bitcoin. I mean, I heard you quoted saying, I'm confident that we're not breaking 20K ever again." And that makes me bullish that you think that. But maybe how are you viewing this rally? I mean, do you really think the lows are in right now?
I really, really do. Look, anything can happen. There could always be black swans. 2020 was a bit of a black swan event where Bitcoin crashed. So there could be instances, I can think of a few of them, like a serious international war or another major exchange going down. But other than that, I do think that the lows are in. I wasn't this confident when we were coming off 15, 16,000. But when we pulled down to 20 and the way we bounced off of 20, I was quoted in saying that when Bitcoin was at about 22 and a half, about to break 23,000. That's when I said that I am as bullish right now on Bitcoin as at any other point in Bitcoin's history. Recently, I just went through the history of my views on Bitcoin. I'm as bullish as I was in early 2017, as bullish as I was in 2021 when we finally broke above 20K. These are the kinds of instances where I think Bitcoin really starts to take off, regardless of what the stock market does or any other assets. Again, unless there is some kind of a major global event or a monster natural disaster that affects an entire major country. So pending those kinds of events, I do think that the bull market is back. It's always ironic how Bitcoin manages to like fall for an entire calendar year and then starts to rise right in the beginning of the next calendar year. So these annual statistics look super cool from both directions. They give fuel to Bitcoin haters that Bitcoin was down 80% in a calendar year. But then the following year, it's up like 300% in a calendar year or more, making up for more than making up for those losses. I do think that the bull market has started. The halving is approximately 1 year away. That usually drives a cycle. We have all of these banking issues that are helping Bitcoin. They're not severe enough of banking issues to stop the economy flat, but they're severe enough for people to think twice about keeping their money at the bank. All these things are aligning. On-chain analytics is looking good, and the technical analysis picture is looking amazing. So yes, I'm bullish probably for the next 18 months. Bitcoin will have its corrections, 20, 25%. But I think that 50% correction is over. And that's why I think the 20K is here to stay.
Yeah. How much do you think of those 4 year cycles? I mean, do you think that holds as adoption continues in Bitcoin? Because it's been almost absurd how those 4 year cycles have kind of stayed the same over time. And to me, it's like it can't be that easy, right? Like these halving cycles and that you can just follow along with them. But do you think that holds in the future?
I think it's going to hold for at least another 8 to 12 years with these 4 year cycles, but they're still not easy. The only one that's been consistent, and it could still be proven false, is that Bitcoin starts to rise with 1 year to go to the halving. That 12 to 14 months before the halving is when Bitcoin starts to rise. And also, when something has happened too many times in a row, a lot of people start thinking, well, this is the year that it's not going to happen. So you start to second guess yourself all the time, and then it happens again. This is the same reason why you can flip a coin, 20, 30 times, and it will always land heads. And every time you think it might not, it does. And within this 4 year cycle, Bitcoin tends to have a high and a low, but they're not always at the same time. So yes, I do believe we are starting that bull market, but we could go up super quickly and the top could come before the halving, or we can go up super slowly and the top will come a year after the halving. So it's just that within a 4 year cycle, we always tend to have a high and a low, but during that 4 years, there's still a lot of variation as to when during that 4 years the high and the low are going to show up. So it's always easy in hindsight, but in real time, it's still challenging.
Gotcha, man. No, it makes a lot of sense. And I guess you heard it here, guys. I mean, the bull cycle is back from Tone. So I would love to check back in on this in a year. And thanks for sharing your expertise, man. Thanks for coming on the show. It's been a great talk. Where can people find you if they're interested in learning more or following along with your work?
Sure. I'm pretty much as Tone Vays everywhere. I'm trying to do my Bitcoin commentary over on the Unconfiscatable handles, Unconfiscatable Twitter handle, and perhaps in the future Unconfiscatable YouTube channel, which does exist for the conference. And all my views on the market, trading side, I'm trying to move that over to the Financial Summit handle. So Fin Summit on Twitter, because it has one too many letters for the Twitter name Financial Summit. And you can find me there as well. Other than that, it's Tone Vays, tonevays.com, Tone Vays YouTube channel. I stream daily, mostly about price analysis and a little bit of geopolitics. I know we have this Fed meeting tomorrow. I still think the Fed, we didn't talk about it. I still think the Fed is going to raise 25 basis points, but they are going to take it easy and start to increase the interest rate slower in order not to have any more catastrophic breaks in the banking system.
Yeah, that's actually my view as well. I think they raise 25 bips tomorrow. But
so, but when
we'll
you guys
see,
hear it,
and
it'll be today, right? So today, I'm
yeah,
expecting
it'll
the
be
Fed,
today when it
to
airs.
raise
We'll see
25
if we're
basis
right.
points. Hopefully, this airs before they say so, and we'll see.
Yeah, no, I agree with you. I think it's from like a credibility standpoint. It was only 10 days ago that Powell was saying how higher for longer. Market was expecting a 50 bips rate, and then they have a banking crisis. So Powell has a lot of egg on his face. And so if they pause completely, I don't see how they do that and maintain their credibility personally. So I think they raise 25 bips, and I think they think their facilities, the liquidity facilities, will help kind of patch the holes of all these crises that are going around. That's kind of how I view it. But anyway, but Tone, thanks for joining, man. You've been a source of signal for a long time. Everyone should go check out Tone's work. For many, many, many years, he's been educating people about Bitcoin. So go give him a follow. Like you said, Confiscatable, Financial Summit, and also his personal accounts. So thanks for joining, Tone. Really appreciate it, man.
Thank you, Sam. I'm looking forward to joining you guys in Swan Spaces on Twitter.
Yeah, man. Come to Cafe Bitcoin. Always. You're always welcome. If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.